Hi everyone, welcome to the latest TM Brunston Market Update. I hope that you're all keeping safe and well during these very unusual and unsettled times. I'm pleased to have with me once again Mark Shields, Investment Manager from Brooks Macdonald, who will be answering a few topical questions. Mark, with the recent political turmoil in the UK, what effect do you think that this will have on financial markets?
Yeah, Brian, it's a slightly difficult question to answer over the longer term. I mean, obviously, when we saw the resignation of Boris Johnson the end of last week, there was a little bit of movement in sterling, but that was quite rapidly changed as more sort of global issues came back to the fore again. So essentially, markets have been pretty neutral on the political news that emerged at the end of last week. And to be honest, I suspect in the medium term, I don't really think that markets are going to be terribly focused on that developing political story. However, I think maybe over the slightly longer term, medium to longer term, then the markets may begin to focus a little bit more on who succeeds Boris Johnson and indeed what sort of relationship they are going to forge with the EU, for example, as well as any stimulus measures that they are likely to introduce. I think there's a reasonable chance that whoever succeeds him will want to try and cement their authority, as it were, and it's possible that one way they do that is by maybe some stimulus such as tax cuts or similar, and maybe again trying to forge links, better links with some of the partners that we have across in the continent. So I think that is something that may well have an impact over the medium and potentially longer term. But I think or at least for the time being, probably over the next few months, I suspect markets will remain focused on issues such as global inflation, interest rate rises, and potential for recessionary risks.
Okay, and picking up on the inflation uh, point there, Mark, that you just made, inflation, of course, is nearing double digits. Um, how do you see this mapping out, shorter and longer term?
Yeah, I think that our case or our thoughts on this are that we may well continue to see inflation tick a little bit higher over the summer, and we may well get even higher inflationary numbers from the UK, for example, towards the end of the summer. But we do expect inflation to probably begin to tail off towards the back end of this year. And mathematically, it's worth remembering that inflation is calculated on a year-on-year increase. So clearly, it will begin to moderate at some point in the next 12 months or so. So, the expectations are very much there for a moderation and a fallback in inflation. As to when that's going to happen is clearly difficult to say. We have got some important information out or data out over the next couple of weeks, including CPI data from the US, some GDP data from the UK, and that will very much begin or continue to have a real bearing on the performance of equity markets. As the if the inflationary numbers remain strong, and frankly, if the economic data remains reasonably strong, which so far actually, for the most part, with some exceptions such as the UK, but for the most part, places like the US, the economic data has remained pretty solid. Then that may well continue to give the Federal Reserve, in particular, the impetus that they need to carry on with their program of interest rate rises. I think that has largely been priced in by the markets, but what I don't necessarily think has been priced in is if we see a moderation in that inflation rate sooner than expected. So that is very much at the fore of what people are looking at and investors are looking at this point in time.
Okay, so whilst no one's got a crystal ball, thinking about the short and medium long term going forward, and also taking into account the likes of Taiwan and China, how do you see things mapping out, Mark?
Yeah, I think we, as I said, we in the near term markets are very focused on the data that's coming out. As I said, we've got some interesting data points over the next week or so from a sort of macroeconomic view. But I think what markets are going to be very much focused on after that is going to be earnings season in the US. So what we have seen is typically companies are a very crude way of measuring the valuation or the value of a company is what's called the price to earnings ratio. So essentially that is how much a company is currently pricing at compared to its earnings. And what we have seen is that essentially the price of these companies has fallen quite dramatically, so hence the PE ratio also has fallen. But what we haven't seen yet is the earnings beginning to come under pressure. So we're coming into earnings season in the US over the next few weeks. And I think, again, markets are going to be very, very focused upon how these big companies in the US perform, especially in the tech space, and whether they are weathering the economic turmoil that we're seeing at the moment, or whether they are coming under a significant amount of pressure. So I think that certainly over the probably for the next month or 6 weeks or so, markets are going to remain really focused on that macroeconomic data as they have been for much of this year, but also they're going to be very much focused on the earnings season from the US in particular. We do have some geopolitical risks bubbling away in the background, as you mentioned, but again, I think that is incredibly unpredictable and likely to sort of be something that may or may not present a risk. I think investors will be much more focused upon areas that they can quantify, such as these data releases that we're going to be seeing over the next few weeks.
Okay. Okay, Mark. Well, thank you. And I'd like to also thank you very much for watching. As always, if you have any questions or queries, please be in touch with us. Thank you.